Good morning, folks. Good morning, folks. Happy Taco Tuesday. Overnight price action certainly suggests we might have something like that cropping up here. And it does look like it's going to be a pretty interesting trading day ahead. Just getting a few things sorted on my end, and we're going to fire this off. There we go. All right, so welcome to Back to the Futures with me, Markets and Mayhem. I'm excited about this episode. I think there's a lot of ground to cover. We've had so many interesting things playing out in these markets, too. Really, a sharp V-shaped recovery from those April lows that just seems pretty relentless. And we're starting to see maybe, just maybe, a bit of a ceiling in place, at least for now, around that key S&P 500 6,000 level where there's an enormous amount of options positioning. So we'll go over that and more in today's presentation. And remember, with all trading comes risk, so please do manage yours carefully. Want to make sure you're coming back tomorrow, next week, next month, next year. It's really all about managing your risk first. The folks at Bookmap would love for you to come join us on the Discord there. We've got a great team, lots of cool educational events, and a ton of information. If you're trying to learn about the product, this is a great place to come and learn more about how it works. And they're having a pretty cool competition right now, trading desk photo competition. It's ending June 30th, so still plenty of time to get your photos in. And really, it's pretty simple. Take a picture of your trading desk, Bookmap running on at least one of your screens, and submit it. You can learn more at bookmap.com/en/bookmap-desk. And a little bit about me. I've been doing this for over 20 years now. I know that dates me a bit, but it also means I've accumulated a lot of experience that I'm more than happy to share. And I think that's what it's all about. One of the reasons I joined social media to share my insights was because I had learned a lot about finance from some pretty impressive mentors. And I wanted to try to pay that knowledge forward as best I could so that other people may benefit. I think that's really what it's all about. It's really about trying to help other people reach financial independence, trying to help them become more consistent as traders, and paying forward knowledge that we're so fortunate to accumulate. So why do I watch order flow as a major part of my day trading strategy? For me, it's been invaluable, but it's also contextual. It has to be, in my own experience, somewhat systematized so that you're not necessarily trying to curve fit or, otherwise look at it and deduce what you want to see. For me, it's more about giving me signals that maybe someone's getting off sides or there's a reversal in progress, that there's some kind of aggression underneath the surface, or really what's happening in the options market that may move the underlying asset. So a quick primer on order flow analysis. One of the things that we focus on pretty intensely is deltas, right? Deltas are essentially the difference between, for example, buyers and sellers. So if you look at the volume bubbles on Bookmap, and some people look at these and they say, what am I even seeing on the chart? What does this chart mean? Well, the bubbles that you can see even in the background of this slide are buy and sell delta. It's volume, but only showing which side is in excess of the other. You could also call it net volume. And this is helpful because it shows you which side is aggressing at a particular moment, whether it's the bubble or even the volume bar below. That also shows you deltas. You can set that up in Bookmap if you want to see those volume bars. I find them to be pretty helpful. Also looking for large passive order flow or icebergs. Icebergs are something that you can infer potentially by looking at a volume profile, but the best way to know whether they're actually happening is through the order flow itself. So when you look at order flow packages like MBO from both Rhythmic and Bookmap, you can see icebergs and stops in futures contracts. That's really helpful, especially when that order flow is large, unusually large. And you can set up your Bookmap program to identify exactly that large order flow. And I'll show you how once we get in. But suffice it to say, sometimes those orders, when they're coming in, can be a good sign of a turning point or expressing continued confidence or otherwise. For example, if you have a large stop run, let's say you get a big move higher, a bunch of shorts get stopped out, but then as that move starts to kind of peak, you see icebergs selling into it. Sometimes that can give you a sense that that might be the end of that move and potentially even looking for a reversal in that. And I'm looking for thousands of icebergs if we're talking about something as big as the S&P 500 E-mini futures contract, right? That is enough to actually have an impact on price. Another area that's interesting is exhaustive trading action. When one party gets offsides, we have indicators we've built for this that can be really helpful. I showed some of them on Bitcoin yesterday. If you were watching the stream, you probably heard them play out because I also have a sound alert that plays out for that as well. It's pretty cool to be able to see when there's potential exhaustion. And what that means is that one side is just getting way ahead of themselves. And when that happens, often is the case that price action is going to cap out, consolidate, and usually take, if it's a buyer exhaustion signal, a little bit of a dip before that consolidation. So if you're long and you see that exhaustion by buyers, sometimes it's a good place to take some profits. If you're looking to scalp short, it can be a good place to sell and very quickly get out of that trade, capturing a quick profit. So those signals are something that I've built based on what's happening with the order flow and when extremes hit that seem actionable. Let's take a look at the technicals here. S&P 500 futures are getting right up to a major pivot level I have at 60.46. That is likely to offer some resistance here. So I think it's worth watching that 60.46 level as we trade this week and get into next week, what with the Fed. We also have CPI, of course, tomorrow, PPI on Thursday, and UOM consumer sentiment. I don't know who UOM polls. It seems like it's only the most depressed people because the divergence between their sentiment polls and inflation polls and pretty much everyone else is widening. But nevertheless, watch that 60.46 level. I think that's going to be a pretty important level to watch here. And under it, if we do see a sell, 59.28 is a level I'm watching very closely. That's my weekly pivot this week. If we did move below it and build acceptance, I would be looking for shorts. Not long-term, oh God, the rally's over, but more tactical shorts, and also taking some profits off the table on longs. NASDAQ technicals have a pretty similar look as the S&P 500. We have a big area of resistance overhead at 22,094.25 and some major support at 21,035.50. These are levels that I'll watch this week as well because, again, if we're able to break above that resistance on either one of these, we've got a pretty clear shot to all-time highs. If we do break below those bottom support areas, we're likely to go back into a period of consolidation. And that's going to set up some opportunities for, selling volatility, but also for some scalp trades, for some fade trades, and some of the names that have really, really run. Because when the broader market consolidates, there's still a lot more going on underneath the surface, as we know. And SPX 6000 is a big magnet level. This was the same title I gave this slide last week because not a lot has changed since then in terms of the options positioning's influence on price. It's only intensified. 6,000 has only become a bigger deal since then. And we can see with the way the market is trading, it has this magnetic pull. The way the price action is day to day, you can kind of see us getting pulled up into it if we're under it, and if we're over it, pulled down to it. This effect could last through OPEX. Unless we have a really big catalyst that takes us, say, 10, 20 handles away on a closing basis, and we're like building that day over day acceptance above 6,000 or below 6,000, it seems like we're kind of pinned here. Now, things can happen that can take that out of play, one of which could be CPI tomorrow. One thing interesting, I know a lot of folks were curious, why did the market sell off the way it did yesterday into the close? When I was looking at the order flow, what I saw was an enormous increase in S&P put volume in the last 20, 30 minutes or so. They were just slamming contracts at some of the most traded put contracts, and that took liquidity out of the market. And these were puts that are hedging against CPI. This is a phenomenon I like to call just-in-time hedging. If you think about it, if vol sellers are out there selling premium on puts and calls, but if they're selling your premium on your insurance policy, then you're on the wrong side of the trade for the longer you have it on. So there's this motivation to put these hedges on just before the event volatility catalyst. And we're seeing some of that play out yesterday into the close. That was one of the drivers of that wild price action. Now, overnight, what drove that wild move higher is anyone's guess. Some are speculating it was the BOJ. The timing for me doesn't really line up on that, and neither does the extent of the move, since nothing was said that was really not known. I think that there's something happening with the trade talks that we'll later hear about, and they are continuing today. So let's see if we get any kind of headlines. I'd say the headline risk that we have in today's tape is elevated, good or bad. If there's progress on the talks, we'll probably get continuation higher. And if we see setbacks, I think we could see a decent sell. The whispers that we're hearing out of the trade talks seem constructive so far. Now, when we're looking at SPX options levels here are some of the key levels to watch as we trade today. I'm just going to put this out there on social as well so folks can see this. And the call wall has moved higher. So originally the call wall was at 6,000. It was pretty formidable. And we have broken above that. And we have a new call wall, and it's really quite large. If you look at this call wall structure here, this is it right here, this really big amount of net exposure at 6,100. So that's formidable resistance. There's some at 6,050, 6,150, 6,200, but 6,100 is the big level. So you can see why that's our call wall. That's a level where even if we do break above that next pivot we talked about, I would look for some resistance there. On the other side, we've got the vol trigger at 6,000. That's the hugest level of gamma positioning on the chain by far, as we saw on the prior slide. If we break below that and we do build some acceptance, I think we could get some continuation lower. Gamma 2 at 5,950 is a magnet level, as is Gamma 1 at 5,900. So we could get kind of caught in that range if we do depart lower from the 6,000 level. On the other side of it, if we move higher, 6,100 is a reasonable near-term target. So let's watch how we react. We could kind of reasonably say 6,000 is the line in the sand right now that the market has drawn. We also have the NASDAQ 100 options visualizer levels. This is a newer version of the visualizer. In fact, we now have this capability for every optionable ETF and stock listed on CBOE. So for whatever kind of data set we want to gather, whether it's the charts, the levels, or even being able to put the lines onto programs like MotiveWave and Bookmap, we now have that capability. And soon it will be available for folks to subscribe to as well. Right now, we're beta testing a lot of that on the TraderAid Discord, and it's been really, really cool for our members. But watch that call wall at 21,800. That is a level of formidable resistance overhead. Gamma 1, 21,700. That is an area where we could get caught a bit magnetically. And of course, we have that vol trigger at 21,500. Moving below it could have us getting back to some of these lower levels. And gamma flip at 20,932, that would be where we'd flip back into negative gamma. Right now, we're more in positive gamma territory. That means, and that's both in the S&P and NASDAQ. That means that chase dynamic is over, and it's the opposite. It's vol compression. Rips are sold, dips are bought. That does tend to take away some of the volatility intraday. And our weekly pivots for multiple different assets. We've got the S&P 500 E-mini at 59.28. For all these pivots, I'm more bullish above and more bearish below, looking for tactical trades in either direction, depending on where we are versus the pivot. NASDAQ 100 futures for the June contract, 21,035.50. Bitcoin, 106,185. Gold futures, 3,356. Silver futures, 34.14. Copper futures, $4.97. And crude, 64.96, where it is building above that. And I shared this on the Discord, but I think that crude's got room to 70. With the way it's moving, it looks really constructive here. It's kind of like an inverted head and shoulders pattern on the bottom as well. That and the way it's breaking above the pivot, and that we keep getting signs that supply may be tightening. Whether it's oil rig counts coming down in the U.S. or OPEC Plus underproducing versus the quotas, we're getting signs that supply is a little tighter as we get into summer travel season. And before we shift into Bookmap, I wanted to just give you an opportunity, if you're interested in Bookmap, to either bookmark this for now, or visit this link later. Traderade.com/bookmap will take you to a special page. We are partners with Bookmap. This gives you a 40% discount if you'd like to buy it on your first term. So that's a huge discount. You can visit traderade.com/bookmap and go to the special offers. All right, so let's fire up Bookmap here. Take a look at what's going on in the markets. Let's start off with Bitcoin today, because this one's been pretty wild. And we had been watching it pretty closely yesterday. You could see another one of these buyer exhaustion fired off here. These little circles like this, they fire off, they show you the volume, and you could see almost immediately we got a little bit of a move higher, but then saw that dip and then some consolidation before we resume. So these signals can be really helpful, particularly for more nimble traders. If you're like a scalper or you're just, short-term trading this would be an area where you'd consider exiting longs and maybe some very nimble scalp shorts. But this is also a signal that can kind of help you get a sense as to where there's large levels of excitement playing out. And just around this level, this was the largest amount of buy-side volume we had seen on the Delta pretty much all morning. We also saw overnight a really large sell bubble that was met with a buyer absorption print. That's what this green square is, and that's showing you that as we were making that low, there was interest by some of these buyers to get in there and scoop up some Bitcoin down there. So that also helped to get us pretty close to a low. We got a little bit lower, but really from there, we were consolidating until we saw this exhaustion. So we had a bit of a buy signal and a bit of a sell signal, all within the span of that overnight session, using the combination of my aggressive absorption indicator and exhaustion indicator. So this is a chart that I think can be really helpful for folks that are looking to trade crypto but don't really know what to look at. I know that it doesn't necessarily have fundamentals. I know that it has its own kind of momentum framework. And then if you zoom out, I really like the Bollinger Band squeeze breakout on things like Bitcoin. I find that to actually be incredibly helpful for gauging the momentum we're in. And let me just bring up a quick chart of that so you guys can see it, because I feel like these are the types of charts that aren't used enough, and yet they tend to work really well. All right, so I'm going to pull this chart over here. This is from stockcharts.com. You can very easily create a chart like this. And you can see this is a squeeze right here. That period in 2023 where the Bollinger Bands squeezed together, you can see it up here as well in the bandwidth chart up top. And then the breakout. As the bands expanded, you had this huge move in Bitcoin that continued and continued. And the 50-week moving average has been an incredibly key area of support to watch. Every time we've gotten back down there since this squeeze breakout, it's been rebid. we haven't had one close below the 50-week moving average on a weekly basis. So for me, that's also a really good sign of demand. So what does that tell us in the here and now? It tells us Bitcoin likely has room higher. Momentum supports it. Buyers have the momentum-driven edge. So seeing more all-time highs in Bitcoin likely to be the case after we had this rebid at 74,400. That's taken us back up to over 100,000, making new all-time highs. And overall, we could consolidate a bit from here. That seems to be the pattern after a surge like this. But after we consolidate, it does seem likely that we continue that push higher. So worth watching Bitcoin very closely here, as well as other momentum-driven speculative assets. A lot of this stuff is getting a pretty strong bid in this environment. And as we look at Bitcoin, let me just very quickly also bring up some of the other things we're watching. I know some folks like to look at silver here. I'm really excited about silver personally. I think what's going on in silver is going to bring us to our 2011 highs this year. I mean, silver is one of these things that when it really gets going, it just rips face, and it's pretty unforgiving when it's having a rally to anyone that's either on the sidelines that wants to get in. You're not going to see a lot of those buyable dips a lot of the time, but it's also really unforgiving for folks that are betting against it when it really gets going. So silver had reached an extreme in the gold-silver ratio that, to me, suggested it was too beaten down. And we also saw a number of different signs. On a macro basis, we saw signs that China was going to start to stimulate domestically. And this is a country that uses a lot of industrial silver. In fact, it's the second largest global user of industrial silver. So when China starts stimulating domestically and they start consuming more silver and they're building out more solar and other projects that are silver intensive, that has a pretty powerful impact. And add to it the amount that gold has run. While silver is secondarily a monetary metal, it really is primarily industrial. If you look at the use cases and what brings silver out of the ground and where it goes, it's primarily industrial, but it is secondarily monetary. And so it should have some relationship with gold. With the amount that gold has run, it does suggest that silver should move higher. And now that we're seeing this big bid across industrial metals, I'm sure you've seen what's happening in platinum. Copper is breaking out. Palladium is looking pretty darn spicy. It looks like it's got some room higher. And silver not to be left behind because it is a pretty key industrial metal. It is the best conductor out there. Yes, it's vulnerable to oxidization, but it is a very powerful conductor. So it's used in all kinds of electronics. It's got a lot of demand in the pipeline as well. So for now, I think silver is kind of consolidating its recent gains. We can see there's even a little bit of a push overnight here. But I think that this is something that has room back to about $48 an ounce, and I would not be terribly surprised to see that play out this year. Sounds like a big move from here, but if you look at the way silver moves when it really gets going, this is just sort of par for the course. So for today's session, I wouldn't be too surprised to see some continuation higher in silver, particularly if we get a bit of dollar weakness and rates coming down and the other industrial metals continue to rally. And this morning, platinum up another 1%. So certainly off to a good start here. Platinum now trading 1,225. Let's take a look at the S&P 500 futures. Overnight session was pretty wild. In fact, I'm going to bring up a different chart here just to zoom it out a little bit more. So we can see we had a pretty sharp drop just as the European session was getting going. That was bid up. And in fact, we got a buy signal. This is a new beta subchart signal that I've got. We got a buy signal from that. It was confirmed by my trend indicator, brought us all the way up to yesterday's midpoint. And the midpoint is the level between the two most active calls and puts when they're in relative balance of volume. That midpoint led us to a sell signal. That was confirmed by our trend indicator. And then just a bit of chop getting below that BGL, getting right back to the vol trigger, and then seeing the trend take shape back towards favoring longs, pushing back up above the BGL. For those that don't know, the BGL is the big green line. It's a 21 EMA on a 5-minute chart. It's a very easy way to gauge intraday momentum, and there's a lot of research behind how it can be helpful for gauging your trading. So I like to have this on our charts. It's a great little reference point, and I even have this little indicator that shows when it's closing below or when it's closing above on any kind of candle. But the subchart indicator I'm pretty excited about because it's been pretty darn helpful, giving us hints as to when the market's getting extended to either side. And about 8:30, it did fire off another sell signal. So we'll see how that goes today. Let's also take a look at the NASDAQ here. It's got kind of a similar look about it. Overnight, you had that drop. There was some pretty powerful buyer absorption there and in the S&P. So you can see that when that big drop happened, we got the aggressive absorption signal that was actionable. Having bought into that signal, that would have yielded about 100 points on the NASDAQ in the course of about 2 hours. We got another aggressive buyer absorption signal here recently around 7. We'll see if that gives us the same kind of continuation. So far, it's been good for about 60 points. We also see buyers pulling up the point of control here. So that is overall constructive. We've got just about 2.5 minutes before the market opens. So I'm just going to quickly take a look around, see if anyone has any questions about anything. And everyone that said good morning to y'all. And we do see just a little bit of selling coming into the NASDAQ just ahead of the open. We're going to bring this back to the S&P here, and we're going to just zoom in a little bit on the time, make this a 30-minute chart. And let's see, what do we have on the calendar today? 9:30 a.m., Defense Secretary speaks presumably about what's going on in LA and how they're sending the military in. Then we've got some ECB central bank chatter at 10 a.m. Got an EIA report tentatively at 12. And then I think the big event of the day is probably going to be the 3-year auction at 1 p.m. Eastern. I don't suspect it's going to be too surprising. I think it'll be reasonably well bid, but that is at least one to watch. The big one is probably going to be the 30-year auction on Thursday, especially depending on how CPI goes. That'll give us a better sense as to what the market is factoring in for the long end and how much of a premium it thinks the long end should have versus the short end, what's called a term premium. I still think the long end should enjoy a bigger term premium, and that's been the case for over a year that I've looked for a bear steepener, and for over a year we've had a bear steepener, and I think it could continue. That is to say, the long end's rates could move higher faster than the short end. Markets opening in just about 30 seconds here. Five seconds. Markets are open here. And seeing some pretty strong buy volume coming in off the open. Some pretty big call buying happening here too. Tesla calls coming through, a bunch of sweeps. Largely targeting 320, 332, 330s. Let's check on Tesla stock real quick. Getting a bid off that initial sell. Just a lot of calls being swept in Tesla, most of them, of course, near dated. Most of them for this Friday, really, June 13th. I'll be adding the visualizer onto this. I think as of next week or the week after, you guys should see the options visualizer and single stocks on here as well. So that'll be pretty cool. Got some big Apple flow hitting the tape as well. Let's take a look at what's going on over in Tim Cook's Apple. Getting a pretty good bid on Apple with all that options flow hitting the tape. Maybe one of the presumptions here is some easing tensions with China giving it a bid. That was one of the reasons Apple was getting knocked around. You can see Hood also getting some love here. 75 calls getting bought up for August 15th. A decent amount of premium. Let's go back to the S&P futures, then we're going to look at the NASDAQ as well. And that big delta candle off the open, that was a buy. That was a pretty large amount of buy volume. Just suggests buyers are getting a bit more aggressive here. We can see that in the continuation. We do have a pivot coming up just overhead. So we look at that 60.27 pivot on ES as potential resistance here. That kind of lines up with yesterday's highest level of interest call strike, that hot call at 60.26 ES, which is about 60.20 SPX. And we could see when we got up to the top of this range we have so far for the regular trading hours, there was a bit of a stop run, 89 stops triggered, presumably from sellers who are getting stopped out there. There is also some passive selling there. All of this relatively small in the grand scheme of things, but it does seem here that we have a confluence of order flow in this first so far, 5 minutes of trading, just kind of giving us a 5-minute opening range, which it's not a bad 5-minute opening range, all things considered. It's about 7 handles in size, but also gives us a sense that we've got folks that are wanting to lighten up and other folks that are wanting to buy more. And this typically happens in the first and last 30 minutes of the trading day. You have a confluence of institutional order flow on either side, and it's really about finding who's got the edge. In fact, that's one of the reasons that opening range theory and breakouts or breakdowns really work, because you're looking for this surge of institutional flow and then continuation, right? Something that gives us a trend out of that range, if we're lucky enough to get a trend day, that is. I personally favor trend days versus chop days. Consolidation trading, or midpoint reversion, as I like to call it, can be fun, but I find that trend days are a little bit more set it and forget it type of trading, and that suits me just fine. And folks, if you have any questions about anything that I'm talking about or otherwise that you'd like me to look at, let me know. This is pretty much summer trading in terms of the volume and liquidity. Someone said yesterday that S&P futures had like the lowest volume they've had in quite a long time yesterday. And the order book is pretty thin too, just about 24,000 contract depth on the S&P 500 E-mini futures contract for June. We are getting closer to roll week. That'll be next week. And buyers are trying to pick it up again here, getting back to the bottom of that regular trading hours range. We're seeing a little bit of a push higher here in that. And again, looking for resistance around 60.27 if we do see a bigger push. More call flow coming into Apple, Meta, Palantir, Triple Q, Silver. Some also targeting the quantum shitcodes, Qubit, QUBT. That one's been a favorite. It's heavily shorted. That's one of the biggest reasons it's been moving. Also, new IPO Circle getting some love via calls. Looks like 125s being targeted for the 20th of June. But so far, the bigger aggressor this morning has been the sellers based on the size of these deltas. So that is interesting. And I'm still waiting for any kind of news to give us a sense as to what may have transpired last night. That move that we had that was not long lived, but still very interesting. There's a lot of volume coming into that move last night for an overnight session. Getting some more triple Q flow, some more Tesla call buying. And I will say the call buying is much more aggressive than the put buying so far in today's tape. So that does suggest we've got room higher. When you see that, that's one of those helpful little indicators if you've got something to watch options activity. So last night we had this big surge on basically nothing. And that big surge was pretty much given up and then some overnight. And that was pretty interesting. That there was a candle around 1:15 a.m. that pretty much gave up that entire move in the S&P, that 15-minute candle. So whatever it was that caused that flurry of buying was relatively undone just about 4 hours later. So we'll see if we come back up and clean up some of those weak highs from last night during today's session. Wouldn't be terribly surprising to see that kind of price action, especially if we can get some kind of headline that the market clings on to and wants to bid from. And it is Taco Tuesday, so make of that what you will. But Tuesdays tend to be bullish, and Trump tends to fold on a lot of things. And when rare earths are involved, and it could be impacting a lot of different manufacturing supply lines, it is likely we see progress, not necessarily because they want that outcome, but because they need that outcome. That is to say, they may not get what they want from the trade talks because of what's on the table, what's being withheld. Huge flows coming into Tesla now. Let's go back to Tesla and take a look here. Yeah, this thing is surging. So we're just going to pull this back a little bit more. Show more of the chart. So it's surging off the lows. It did find some more sellers, but we are seeing that flow continue. And as the flow hits the tape, you can see these little spikes. Every time one of these spikes was happening in the chart, there are all kinds of call sweeps hitting the tape. The last set of call sweeps targeting that 315 strike on Tesla. And S&P futures getting back towards the highs of their session here. Overall, this tape does look pretty constructive. I think it wants to move higher, and I wouldn't be surprised at all if we go back to last night's highs and kind of cap out around there. We are seeing just a modest amount of iceberg selling here, but nothing alarming. Neither side showing too much aggression in this tape. And we should start to see some of that SPX options order flow hitting pretty soon here. More Tesla sweeps coming through as well, this time targeting the 332 and 320 strikes. And just retracing here right back to the just closing in on those session lows. I haven't yet seen a really good setup that makes me want to trade this tape, but we may be getting closer to that here. Let's see if we're breaking the bottom of the range. Starting to break the bottom of the range here. Getting some chunky buyer absorption at the bottom of the range. That's interesting. That makes that look like that's worth a bid. And just testing the BGL here as well. I'm just going to bring that back up on screen. You could see we had that push above the BGL. Now we are retesting it to the downside. I'd like to see us hold above the BGL and target that pivot to the upside. That would be the ideal scenario. So far we are holding above the BGL in that 5-minute candle. So we didn't get a close below. That's good there. We got that aggressive buyer absorption. That's also constructive, telling you buyers are willing to defend price at the bottom of the regular trading hours range. Now we're pushing above that point of control. So this would be a decent area to consider a bid and then look for 60-20, 650 or so as an exit for just a very small scalp trade. Retesting that BGL, but it looks like buyers have some appetite here. Seeing some chunky sweeps coming into Google. That's a stock I've been mentioning for a bit that I felt like it had some decent room higher. Let's take a look at Google here. Oh, wow. Look at that price action. That is pretty constructive. So this is one of the swing trades that we had out for members. And then I'd also been talking a little bit about the chart on social and just how I thought it looked constructive. And it is continuing here. We've got these sweeps now targeting the 182.50s and the 185 calls for this Friday. And they just continue to come in. Talking about a few $100,000 of premium hitting the tape for those Google calls in the last few minutes. So that helped to make this big push higher happen. I think Google's a bit of an underdog in the whole AI situation too. Their models are actually best of class, and they're working with their own silicon for a lot of this, their own TPUs. So it's pretty cool to see what's going on over at Google. More calls hitting the tape for Google here. Looking at those 185s for this Friday now. Just keep seeing calls for Google. It's just really dominating the flow right now. Another 180 sweep, another 180 sweep on top of the one that just hit. So that's another 100,000 in premium paid. So folks are really looking for Google to hit 180, and you can see that large offer overhead just around there as well. And seeing a resumption of that upside in Google here, I think 180 is a no-brainer the way this thing's trading. More flow coming in, targeting that strike as well. Now they're starting to hit the 182.50s. You can see that really aggressive buyer delta bubbles here as well. That's showing you some conviction. So we'll be watching that 180 level. I think that it's quite likely we hit that today and possibly get a nice push through that 182.50 strike. And let's just zoom out a little bit. You can see there's a lot of interest at the 182 as well, but 180, 72,000 shares on offer up there. Now 73. Let's go back to the S&P 500 futures here. We should start to see some of that flow. Yep, we're starting to see some of the flow coming through. Looks pretty constructive. Decent amount on calls versus puts, about 2-to-1 early on. It's very early in the day, so I won't make a ton out of that yet, but it is at least an encouraging sign. So we've got, let's just break this out here. Just going to go to my flow channel on my Discord where this updates minutely. And the hot call targeting 60.46 on ES, implied by SPX levels versus ES, factoring for that delta, so that'd be about 60.40 on SPX. And then the warm call targeting 60.56 on ES, which would be 60.50 on SPX. There's a pretty chunky amount of gamma up there around 60.50 as well on the call side. So if we can break above that 60.27 pivot, that would be the next major level that I'd be watching, which is pretty close to that major pivot that I mentioned earlier as well. And we can see some of that put flow starting to pick up here too. So again, it's early yet. I like to give it at least until about 10 a.m. or so to really see where the flows are taking shape. I also wouldn't be too surprised, given that CPI is tomorrow, that we see some of that just-in-time hedging continue today, either in the AM or PM session. And for me, the AM and PM session for the options flow, the really important parts of that are the first and last hour. They tend to be kind of formative. And if we go back to our chart here, we could see we did pretty much find support at that BGL when we got that aggressive absorption where buyers were absorbing sellers. That was a place where I said it wasn't a bad place to consider a bid. And then holding the BGL, that was another interesting area to consider a bid up to 60.27. If you're looking for this to be a bigger trend, this break that we're starting to look at to the upside, 60.27 would be where I'd consider taking off some of that core position, 2/3, and then runners I would let go to the options implied strike of about 60.46. And we're actually now, interesting, seeing the hot call roll up to 60.60 on SPX, 60.66 on ES. So overall, again, looking pretty constructive. Let's see if we can break the top of this range here. We see some iceberg selling, but it doesn't really seem to be deterring buyers much here. And we have built out that 20-minute opening range, and it looks like we're just about to challenge the top of that 20-minute opening range and break above it. And there it is. So I'd say at this point, buyers are enjoying a decent edge. We've got a resistance level we need to look for around 60.27. Options flow so far now relatively balanced, but again, it is early yet. I would like to see the top two calls volume about 40% bigger than the top two puts volume to really get some more conviction about upside continuation. So we'll be watching that as the flow develops. But overall, I've got a feeling that today will be a reasonably green day. And I think at some point today, we'll go up there and clean up the overnight highs, which just suggests we could get a decent continuation from here. Seeing some more call flows hitting Apple. I want to just check back on that one as well. Yeah, Apple, wow. We talked about that a little earlier with the sweeps hitting the tape pretty aggressively. This one getting back to session highs and making a pretty big move as we see more sweeps hitting the tape. So again, just speaks a little bit more to the idea that options can influence price in these things, and typically it's a pretty outsized impact. Let's check back on Tesla. Tesla getting back to the point of control here, also seeing a pretty good resumption and also seeing that flow picking up once again in the Tesla calls. Let's take a look at Triple Q here as well. We've got the visualizer on there. It is broadly constructive. Triple Q flow, definitely seeing quite a bit more on calls versus puts. About 20,000 in the calls, 13,000 in the puts on the top two versus top two. So I like that look. And we can see fair amount of QQQ sweeps hitting the tape as well. Most of that not too far out of the money near dated stuff. Many of them expiring today. People trading the QQQ 0 DTEs constructively. Can check on SPY as well. SPY also looks relatively constructive. You've got, 45,000 versus 29,000 on the top two calls versus the top two puts. So that retail expressing a lot of confidence in SPY here in terms of the flow we're seeing hit the tape so far. And OpenAI taps Google a new cloud deal for more compute, according to sources. So that's one reason we're seeing all that Google flow hit the tape. And it looks like folks kind of knew about that a little bit earlier in the session than when it hit the wires over here. But nevertheless, that is a good sign. And it's also probably not as good for Microsoft, since Microsoft was OpenAI's big provider. So what was good for Google here, and you can see it in the chart, you can see that boost around 944, Microsoft around the same time seeing some selling pressure. So I think we can explain the move in Google in no small part due to that news and a lot of the flow hitting the tape. Tesla flow also looming large here. Let's see. Yeah, we're getting right back to the top of the trading range. Huge sweeps hitting Tesla. In fact, one of them even targeting 405 per share, but the 320s seem to be a pretty desired strike right now. That's where most of those sweeps are coming in for Tesla, and a lot of them expiring this Friday. Several $100,000 in premium paid so far. Let's go check back on Bitcoin. We started with Bitcoin. We're going to go back to Bitcoin here. Look at this. This is really cool. This big seller absorption, and that what I mean by that is sellers absorbing buyers here. That marked the peak of this move so far. So we've had a bunch of clues in the order flow in Bitcoin. We had this buyer exhaustion event. We sort of consolidated, made a very small new high, and buyers were aggressively absorbed by sellers, and that led to price tumbling by about $1,000 in Bitcoin. So it's really cool to see how these tools can help managing our risk in these trading environments, because if I saw that and I was long, I would be getting out of town, and I would even consider a reversal on a print like that. Certainly, that seems to have worked so far. Sellers showing a lot of aggression on Bitcoin here. So got about 2 minutes left in the stream. I want to remind you folks that we're working on a lot of really cool stuff over here at TraderAid. So check us out at traderaid.com. And if you want to check out Bookmap, if you find it useful for your trading as I do, come visit traderaid.com/bookmap. Scroll down to the special offers and get up to 40% off your first billing period. And come back every Tuesday at 9 a.m. Eastern. I do these streams, Back to the Futures. Every Tuesday, we look at stocks, ETFs, futures, and crypto, primarily Bitcoin, but I'm interested in looking at whatever folks want to look at. You're always welcome to ask questions and, put in chart requests and things like that. That's what makes this a lot of fun. Seeing some interesting flow hitting AMD here too, targeting the 125 strike. That's another stock that I shared on Navigating the Markets that I felt may finally be due for some moves higher. And we're starting to see that, the potential for AMD really breaking out. This has been a laggard for so long, but I will say their 9090 XT video cards with 32 gigs could be a game changer in that market. Really give the 5080 and 5090 a run for its money at a more compelling price point. Also seeing Meta $700 calls coming through, some pretty decent aggression. It's not too far from the money, but nevertheless, that was a decent amount that they were putting into that. So, folks, I want to thank you for tuning in to this week's episode of Back to the Futures with me, Markets and Mayhem. Like I said, I'll be back next week, 9 a.m. Check out that Bookmap contest, too, where you can take a picture of your desk, and there's cash prizes. You can also win access to Bookmap. It's pretty cool what they have going on over there, and I think it's an awesome charting platform for intraday trading, for really getting into the order flow, and it allows you to layer on tools. Like I've been able to build my own tools for Bookmap that are available for TraderAid members, and some of them out for the public, like the SPX options visualizer. That is something you can learn more about as well by going to traderaid.com/SPX. So, folks, thank you so much for tuning in to this week's episode of Back to the Futures with me, Markets and Mayhem. I'll catch you next week.